Domain 2. Manage capital structure, long-term capital costs, and capital resource investments. Domain 2 of the Association for Financial Professionals Certified Treasury Professional (CTP) examination focuses on strategic financial management and the Treasury function's role in optimizing long-term capital structure. Treasury professionals are responsible for balancing debt and equity financing, minimizing capital costs, managing investment resources, and supporting long-term organizational growth. This domain emphasizes analytical decision-making, market awareness, and strategic financing activities that directly influence shareholder value and financial stability. A major component of this domain involves negotiating and managing syndicated loan agreements. Syndicated financing allows organizations to obtain large amounts of capital from multiple lenders while diversifying funding sources and reducing lender concentration risk. Treasury professionals must understand loan structures, pricing mechanisms, covenant requirements, interest rate terms, and lender relationships. Effective negotiation helps organizations secure favorable borrowing conditions while maintaining financial flexibility. Investment portfolio management is another important competency. Treasury professionals manage surplus corporate funds by balancing liquidity, yield, safety, and diversification objectives. Portfolio decisions may involve money market securities, fixed income instruments, commercial paper, government securities, and other approved investments. Treasury managers must align investment strategies with corporate policies, risk tolerance, and cash flow requirements while monitoring market conditions and investment performance. The largest portion of Domain 2 focuses on the issuance and management of debt and equity. Treasury professionals participate in raising capital through bonds, notes, loans, preferred shares, or common stock issuance. Responsibilities include evaluating financing alternatives, coordinating with investment banks and legal advisors, managing regulatory compliance, overseeing dividend policies, and handling debt retirement or refinancing activities. Understanding the cost of capital and its effect on corporate valuation is essential for making sound financing decisions. Candidates must also understand revolving debt agreements, which provide flexible access to short-term and medium-term financing. Treasury professionals manage revolving credit facilities to support liquidity needs, working capital requirements, and contingency funding while monitoring covenant compliance and borrowing capacity. Another key area involves assessing the financial impact of mergers, acquisitions, and divestitures. Treasury professionals evaluate transaction structures, financing strategies, integration costs, valuation implications, and potential synergies. These activities require strong analytical skills and coordination with executive leadership, legal teams, and external advisors. Market condition analysis is critical throughout this domain. Treasury professionals continuously monitor credit markets, interest rates, borrowing spreads, investor sentiment, and economic trends to determine optimal financing timing and structure. Understanding how market conditions influence long-term borrowing strategies helps organizations reduce financing costs and manage financial risk effectively. Finally, this domain emphasizes hedging foreign exchange, interest rate, and commodity exposure. Treasury professionals use derivatives and risk management techniques to reduce earnings volatility and protect corporate cash flows from adverse market movements. Overall, Domain 2 highlights Treasury's strategic responsibility in capital planning, financial risk management, and long-term value creation.